And now, may I ask Dr. Laura Ignacio, please, for her remarks.
Good afternoon, everyone. I am Laura Ignacio from the Center of Monetary and Financial Policy of the Bangko Sentral ng Pilipinas. I would like to thank the ADB AIM Knowledge Hub for Trade and Investment for organizing this forum on a very important topic. The Deputy Governor is currently attending a conference abroad, and I do not intend to fill his shoes, and as such, my statement should not be construed as reflecting the policies and opinions of the BSP. I do hope to gain valuable insights, perhaps some feedback from this forum. And I would like to thank Dr. Warnock for your presentation. Indeed, capital flows have been very much in the news these days, together with the rapid appreciation of currencies of emerging economies. And truly, global economy at present is more financially integrated than before. And so investment decisions can be made across countries. In general, capital inflows are considered beneficial as they indicate confidence in the economic management of the emerging countries, as mentioned by Dr. Omar. But they also provide lower cost financing. However, massive capital inflows lead to considerable appreciation of the exchange rate, which reduces competitiveness. This is a major concern for most emerging economies that are export dependent. In addition, there is the potential for overheating, and also easy access to capital may lead to imprudent borrowing, creating potential risk in financial markets. However, for the Philippine experience on currency appreciation, it is not limited to capital flows. There are other factors that play a role. The table shows selected sources of foreign exchange as percentages of GDP. Selected sources here include exports, remittances of overseas Filipinos, direct and portfolio investments of non-residents. As you can see from the table, the main sources of foreign exchange inflows are current account items, exports of goods and services, and transfers. The capital account items, direct and portfolio investments have relatively lower levels, but with greater volatility. Remittances continue to grow despite the global downturn. For the first 9 months of this year, the value is at $13.8 billion. Another important source of foreign exchange is the business process outsourcing under the trade in services. So how do the BSP respond with the capital inflows? Actually, the BSP has undertaken various measures to ensure smooth adjustments in the foreign exchange market. On a year-to-date basis, peso appreciated by 5.4%, closing at 43.83 to a dollar. That was 5 days ago. Yesterday it reached 44 pesos. And the BSP has also done accumulation of reserves. The level of gross international reserves stands at $57.15 billion as of end October. This level could cover 9.9 months of imports of goods and services. BSP also has, as part of its toolkit, macroprudential measures. The BSP has implemented measures in line with the Basel framework. These are measures that aim to minimize risk of imprudent borrowing and also to minimize potential adverse impacts that may result from the reversal of loss. The BSP also has undertaken liberalization of foreign exchange regulatory framework, giving greater access to foreign exchange for outward investments. For the exporters, it is to be noted that international competitiveness is not solely determined by exchange rates, but also by government policies on trade and the cost structures and business practices of the private sector. And also, it is not, what is happening at present is not the case of the peso appreciating unilaterally. It is the weakening of the dollar resulting to the appreciation of a group of currencies. And so the competitiveness of the peso has to be looked at in relation to movements of currencies of competing and trading partners. And so we have to look at the Philippine Real Effective Exchange Rate, or the REER, and on a month-to-month basis, the REER decreased as of end October. But the BSP has the following initiatives to mitigate the impacts of the peso appreciation. The BSP promotes the use of hedging facilities by exporters. The Development Bank of the Philippines, in coordination with the Department of Trade and Industry and the Department of Finance, has a hedging facility to protect exporters from further exchange rate losses through foreign exchange insurance and forward foreign exchange rate protection products. Also, the BSP set aside budget for foreign exchange rediscounting facilities that allow banks to rediscount existing loans to exporters to help support the working capital needs of exporters. Another set of BSP responses for overseas Filipinos. It is important for us to understand that not all overseas Filipino workers are adversely affected by the peso appreciation, only those who are paid in dollars. So Filipinos who are being paid in currencies that appreciate against the dollar may not necessarily be worse off. And the BSP also has initiatives to improve remittance environment. One is the BSP requires banks and non-bank financial institutions to provide information on charges and fees for the use of overseas Filipinos. So this encourages transparency, and we believe that transparency will lead to lower costs or charges. BSP also encouraged banks to offer overseas Filipinos specialized investment products and services. BSP also undertakes financial learning campaigns to encourage overseas Filipinos and their families to channel savings into productive investments. And in conclusion, the first best response to large and volatile capital flows is a combination of strong regulatory oversight, sound macroeconomic policies, prudent debt management, and the development of strong domestic financial markets to absorb capital flows. Thank you very much.